The Nedgroup Investments Excess Diversified Fund of Funds Q3 Commentary. The Diversified Fund of Funds was down -1% for Q3 2019 and year-to-date is up 5.3% and is flat with a negative 0.7% over the past year. What has been the main contributors and detractors over this quarter? In terms of contributors, the foreign exposure at close to the regulated maximum of 30% made a meaningful contribution as the rand weakened 8% to the US dollar and global equity markets outperformed the domestic market. Veritas, the manager of the Nedgroup Investments Global Equity Fund, through good stock selection has added significant value year to date, with some of its largest stocks, Charter Communication up 45%, Comcast up 34% and Microsoft up 38%, posting strong US dollar gains. The foreign exposure, high cash allocation and short duration position of the Nedgroup Investments Flexible Income Fund also contributed. In terms of detractors this quarter, the banking stocks Standard Bank -9% and FirstRand -7% performed in line with the financial sector, which was down 7%, as the market continues to price in a challenging environment for South African-focused stocks. Diversified Miners BHP Billiton, which was down 7%, and Anglo's down -8%, were hurt by a sharp decline in the iron ore price. Sasol, -28% for the quarter, delayed the release of financial results on the 16th of August and the 6th of September, citing the need for more time to conclude the investigation into the budget overruns and delays of the Lake Charles chemical project. Domestic property stocks accelerated down -40%, Depula -40%, and Delta -70% were punished by the market for poor financial results. In terms of diversification, the Diversified Fund of Fund is currently sitting at 52% in domestic equities, 5.2% domestic property, and 16.3% domestic fixed interest. The fund has 17.7% foreign equity, 3.2% foreign property, and 5.7% in foreign fixed interest, giving a total of about 27% directly offshore, with a further 22.2% in rand hedged stocks. This gives the portfolio just under 50% exposure to offshore markets. Naspers at 3.5%, British American Tobacco at 2.6%, and BHP Billiton at 2.6% make up three of the largest stocks within the portfolio. In terms of the recent changes within the fund in terms of asset allocation or fund manager selection, Q3 saw the introduction of a new domestic equity manager, Laurium Capital. Laurium is an independently owned investment manager with 26 billion rand assets under management, managing several hedge and long-only funds in South Africa and the rest of Africa. The company was formed in 2008 and is based in Johannesburg and Cape Town. The foreign equity overweight was reduced to neutral and the local fixed interest short duration increased to overweight over the quarter. A healthy allocation to defensive assets remain, whilst our neutral position to domestic bonds and domestic property is largely retained. The funds are well diversified across all asset classes with a moderate risk positioning.